A typo in Lyft's earnings sends shares soaring. And then what happened? I'm Lisa Bernhard with Reuters, and here to tell us what happened is Liz Miller. She's president of Summit Place Financial Advisors. Liz, happy Valentine's Day, first of all. Let's start off by talking about Lyft, the ride-sharing company, obviously, which reported earnings after the close yesterday, and its stock soared 67%. But there was a typo in the report. So for those coming to this story cold, tell us exactly what happened.
What a ride. So we don't get these stories that often. Lyft had a very good quarter. And in the CEO's remarks, the CEO said that margins were going to improve 5%, basically 500 basis points. And the answer was really 50 basis points or 0.5%. That got clarified a little bit later. But yes, so it was just a debacle. That's the only word for what it was. And at first, as the stock soared on that release and they realized it, when the correction came out, the stock went completely down at some point in the night, it was trading, just up like 1.5%. So I am sure nobody wanted to be in those executive offices yesterday afternoon and evening. Today, we're seeing the stock up 30%. So to put it in context, it was a great quarter. Lots of improvement there. And the important points were really on the outlook, as we always see with these year-end earnings. It was a good quarter, but the outlook for the company is much stronger bookings. And to me, the most important piece was they're going to be free cash flow positive this year. That's a huge move for Lyft, and that certainly justifies the movement we're seeing in the stock right now. I think if the stock were up 1% still, we had that complete up and down, quietly, there might have been a few people worrying about their jobs at Lyft. I honestly don't know today. I can't remember in my career seeing that kind of mistake in a major company's earnings release.
Wow. Okay. So tell us who got burned. Were there investors who got burned, and should they have known better? I mean, 5% and 0.5% sounds like a pretty big discrepancy to me. Should investors potentially have taken a beat to digest that, or what do you think?
The tone of the whole meeting was very upbeat. So the 5% move in margins for some people might have seen something that was doable. They talked about cost cutting and they talked about improving margins. And so from where they were to where everyone wants them to go, it might have seemed great, but certainly some people acted on it. Yes, there's certainly investors after hours that got burned. The stock has been so beat up that even that big move, wasn't that huge. We're up over $3 today for that big move. So from a dollar standpoint, it wasn't huge. But certainly if you suddenly decided the future looked brighter and it was time to get on board, then some people didn't think it was that expensive of a buy last night. And they're probably not feeling good about that once the correction came. We'll have to wait and see. These are the kinds of things that months later you see if there's any kind of class action suit for that. Certainly there might be grounds for it.
All right, let's change gears then from an inexpensive stock to a very expensive stock, which is NVIDIA. And shares are up 50% this year. It's only February 14th, Valentine's Day. And shares are up 231% in the past 12 months. Yesterday, it overtook Amazon by market cap to become the 5th most valuable company in the world. Today, it briefly overtook Alphabet to become number 4. We'll see where it closes today. First off, let me ask you, is it worth this valuation?
Well, that certainly is the million-dollar question. Is NVIDIA worth the valuation today? NVIDIA is trading at almost 100 times trailing earnings, but you look at estimates and it's trading at 35 times forward earnings. We don't see too many companies with that kind of gap between looking backwards and looking forwards. NVIDIA is certainly, there's no question they are the leader and in the sweet spot to benefit from this big move to artificial intelligence. I think everyone's trying to make sure they have exposure as they really figure out what does AI mean and what will it mean in the future. So it's easy to jump on NVIDIA as that company. We've been owners of NVIDIA for a very, very long time. And I think the one thing we need to remind everyone, it's not a new stock. This move is not atypical in their history. If you look at a very long-term history of NVIDIA, it has often been this volatile, just soaring and then crashing. I was looking back at pre-08, before the Great Recession and that bear market corrected today. It was an $8 stock. We laugh at that. Wouldn't that be great to own it at $8? But it was $1.70 by January '09. So a huge crash from a huge high. So NVIDIA as a stock has a rich history of incredible spikes up and incredible falls. And anyone investing it should always keep that in mind. It's a great company for what it does. It has good margins. The company is real. We look at an Amazon back in the day, and those are companies that for years had great valuations because they didn't have earnings. That's not an NVIDIA. It's a very real company, but it has a history of being very volatile, and investors should certainly be aware of that.